Right now, for more on this conversation, let's bring in Jorge Castro, who is former counselor to the IRS commissioner in the Obama administration. He's now the co-leader of the tax policy practice at global law firm Miller and Chevalier. And Joel Griffith, who is research fellow with the Heritage Foundation. And gentlemen, thank you both for being here. Jorge, I want to ask you first, in your time and your experience with the IRS, what did you see, and do you think a plan like this will work?
Well, thank you very much for having me. I think there are a couple of things at play here, right? One is obviously the IRS budget has been undercut significantly for the last decade, right? So there's that at play. And then clearly there needs to be congressional investment into technology and audit systems at the IRS. That's significantly been lagging behind, and that's obviously caused audit rates to also go down. So I think there's the question about how much will IRS enforcement help, right? And undoubtedly, can the IRS take in those new investments? I think the answer is yes. Now, then the question becomes, well, what's going to be the return on that investment?
Right. And Joel, that's the question, too. Two questions here. First, should we be doing this? Second of all, if we do, will it raise the money? Let's tackle the first question first. Joel, what do you think?
Well, thanks for having me. Well, first of all, the federal government is awash in money right now. We've seen tax revenue increase by 22% since the tax cuts went into effect. But what this proposal would do, would arm 90,000 new IRS agents to go after not just the ultra wealthy, but this would go after many small business owners. It's going to increase the risk of audits. It's going to force even small firms to pay more for accounting fees. And it's going to involve a lot more compliance time. And there's really not much benefit for all the costs incurred either. Talking about possibly raising $120 to $200 billion in new tax revenue to cover part of this possibly $3 trillion tax scheme. But you're going to be harassing so many small business owners. Just a second. Before
we get to the harassment on this, if you don't have enforcement there, you are going to have people who either cheat or try to skate very close to the edge, trying to use the most aggressive strategies that they can. You know, you want to talk about paying your fair share. You can argue what the fair share is, but you should pay what you are obliged to pay. And if there's nobody checking, there are going to be cheaters. What's wrong with making sure you step up enforcement and make sure that you're kind of smoothing things out, especially if we have seen these investments get to the point where we know that fewer people are being audited, especially at the highest levels?
Well, speaking of the fair share, the top 1% in this country are actually paying about 40% of the total federal income tax burden.
Let's just talk about people who are not paying what they are due. That's what we're talking about. If you're using enforcement to go after people, not to harass them, but to make sure that people are paying what they owe. Well, for those of us who do pay, if you're a W-2 employee, it's pretty tough to cheat. If you're not, there are a lot of ways of getting around that.
Well, and the Congressional Budget Office has very clearly said in their analysis, this would only increase compliance modestly. What this will do is deter a lot of businesses from taking tax credits that they're entitled to take.
Or taking ones that they're not sure about and listening to an accountant who is pushing a pretty risky strategy that you know is kind of skating on the edge. Did we just lose Joel? We just lost Joel. We'll try and get him back. But, Jorge, let me turn to you on this. You do think there are some problems with this and some problems with trying to do this so quickly for a plan that's been put through. Why don't you explain what you think is wrong with it?
So I think, let's step back a second here, right? I mean, clearly what's driving the Build Back Better plan that the administration is proposing is the social spending programs, right? Child care, health care, education, right? Tax is just kind of is the funding mechanism by which to pay for those programs, right? And clearly, Democrats are on a very compressed schedule, right? And obviously, when that happens, that's going to raise challenges as to kind of what's the right policy, right? You're seeing it play out right now, right? The Senate, the House, different senators with different priorities, and all that's happening extremely quickly. So it is challenging for stakeholders, even members of Congress, to try to assess kind of what are the consequences of these tax proposals.
I think we have Joel back. Joel, you want to respond? We were just in the middle of that when we lost the connection.
Yes, well, yeah, without a doubt, the spending proposals are the largest expansion of government in our nation's history. The issue is, well, how are we going to pay for it? Well, even going by the CBO's own estimates, this would only bring in about $120 billion over that 10-year period, which covers only about 1/15 of the total amount of spending that's been proposed just with this reconciliation package and the infrastructure bill. So we really have to ask ourselves, is that $120 billion of possible revenue coming in from increased compliance, is that worth the harassment of so many small businesses by these 90,000 new agents, businesses that, for the most part, are complying? If you look at the numbers coming in,
it's been the wealthiest Americans who have seen their audits go down. Let's just be fair and straight about that. It's been the wealthiest Americans who saw their audits go down as there were less money to go around with auditors. And that has in turn encouraged people to kind of push the envelope in terms of what they will and won't do. And again, if you're a W-2 employee, you are paying exactly what you're due because everybody's checking and looking ahead of time. If you're using different ways of going about it, whether that be calling yourself a small business, because there have been a lot of individuals who have done that over the last 10 or 20 years, or doing something else to play around the edges, that's, I think, where enforcement would have a little more teeth.
Yeah, and if you look at the Congressional Budget Office analysis of this proposal, they make it clear that this audit risk is not just going to be for those that are in those upper income levels, and it's not just going to be an increased audit risk for those that aren't in compliance. This is going to be an increased audit risk for all, regardless of what you're earning and regardless of whether or not you actually are in compliance. And that's the big concern here.
Looking at the IRS as an honor system, you're going to have people who always pay exactly what they owe, and you're going to have people who cheat. If you just do it on the honor system, that's the way it's going to work out. I do think you have a fair point, both of you, with the idea that this may not be anywhere near the income that the Democrats are counting on. I think the CBO will show us that later this week. But, again, you can look at the two questions and maybe come out with a different answer on each. Joel, Jorge, thank you very much for being here, both of you today. We appreciate it. And we'll have you back to talk about this after we see the score from the CBO.